All right. So speaking of IPOs, Robinhood. We've been waiting for this for I've been hearing news, rumors of this for at least 2 years now, and it seems like it's finally happening. So we wanted to do a read through like we did last week with those other two. So I'm gonna share my screen here, and I have their S1 up. I scrolled through so many pages of just fluff like this that you could see of just like customer testimonials and all sorts of, pretty stuff like that to get to the kind of meat and potatoes of this form. It's longer, much longer than the other two we read last week. So
There's probably some big disclosures there on litigation.
oh my God. I can only imagine. Speaking of disclosure, full disclosure, I have not read through this, Todd. I believe you have not either. So this is all new to us. I have heard some just general talk about how much money they're losing uh over the past year or so, and it's frankly pretty staggering. So if you if you live under a rock, Robinhood is the new the new kind of kid on the block as far as brokerages go. You see here their mission is to democratize finance for all. Feel free to laugh at the irony of that if you want. um, given the happenings over the past several months, but basically the the plurality of traders on like Wall Street Bets and similar forums are using Robinhood. They were the first commission-free brokerage. I started trading on their platform back in the day, as soon as all of the other big brokerage firms, Fidelity, Ameritrade, Schwab, etc., went to free trades. I switched off literally that day. Could not get out fast enough, but that's just me. So anyway, let's get to the details. So I'm not really seeing a whole lot of interest on this first page.
Well, one of the things I think is interesting there is that if you look at under cultural impact, over half of 18 to 44-year-olds in the U.S. know who Robinhood is. That's interesting.
Yeah.
Brand recognition is an asset. So I guess there's no such thing as bad press argument comes. Is that true or not? Do they know it in a good way? Do they know it in a bad way? And then the other thing I think I see down further here is it says, as of the end of March on that second page, Joe, 18 million net cumulative accounts. So that's a lot of accounts. And they say that
actually a lot less than I would have expected. Because I don't know about you, but like generally my friends, colleagues my age, people generally in my age group, early to mid 20s, most of the people that I know have an account on Robinhood. So I was actually expecting that to be like somewhere around, I don't know, 30 million. So little surprising to me.
Well, what's interesting there too, Joe, to your point, is if you look down in the third paragraph down, you'll see that our Robinhood Snacks newsletter and podcast had 32 million subscribers. So 32 million people subscribe to Robinhood Snacks. 18 million have a net cumulative funded account. So there's a little gap there between the people who are aware of Robinhood, the people who maybe are getting something from Robinhood delivered to their desktop or their smartphone, I should say, and the people who actually put money in that brokerage account. But there is a lot of competition. I mean, we already talked about the standard regular people out there, E-Trade, Ameritrade, Fidelity, et cetera. E-Trade, this is basically the newer version. E-Trade was disrupting back in 2000 or whatever, and Robinhood disrupting today. But it's certainly not the only one disrupting, right? Because there's also, Joe, Webull, right? And there's some of these others. And they use kind of similar marketing tactics where they say, hey, tell your friend and we'll give you a free stock, right?
Exactly. And it works. I referred people when I had an account. Well, actually, I still do have an account. It just doesn't have any money in it. But yeah, it seems to be an effective tool. So we're just going to keep kind of pushing through here. Here we go. Here are some numbers. So 245% year over year revenue growth.
Wow.
Only 959 million. That's for the whole year too. I'm surprised that it's that low, given that they have 18 million accounts, active accounts, I guess you could say. Net income of 7 million compared to the previous year, a loss of 107 million. Safe to say they probably have some debt on their books. 155 million EBITDA compared to a negative 74 million the previous year. So a nice little turnaround from them. And then further down here, we have the most recent quarter ending at the end of March. Still even bigger revenue growth, 309%.
Wow.
522 million up from 128 million. So they're
Look at that net loss though in the next line.
Oh my God, that's yeah. that's a blowout loss right there. 1.4 billion in just a quarter. That included, they say, a $1.5 billion fair value adjustment to our convertible notes and warrant liability compared to a net loss of 53 million the year prior, first quarter.
So that's a one-time, that's theoretically a one-time item. So it's really $100 million loss.
Yeah.
But when you think about 2020, they turned a profit in 2020 of 7 million. So is this litigation expense? I mean, they did get recently hit with a $70 million fine.
Yeah.
Just going back and take a look at my notes here. Yeah, FINRA hit them with a $70 million penalty over outages and approving accounts for options trading that probably shouldn't have been approved for options trading.
Yeah.
So regulators have taken aim at it. And, you know, obviously there's expenses associated with that. And maybe we're seeing some of that show up. Also probably in the preparations for the filing, there's maybe some expenses there.
Yeah.
Something to definitely track though, right?
Yeah, it'll be interesting to watch. I'm certainly looking forward to seeing this company public, just so we could kind of get an idea of like, can they really continue to make money? I'll be interested to see like what their litigation expenses are in the upcoming quarters in the upcoming year. So yeah, certainly some trends to watch here. So then we kind of get into the disclosures, and so they're talking about here, for those of you who are listening, the things that are kind of working favorably for them. So obviously, the whole concept of stock trading is a lot more kind of digitalized than it was 10 years ago, 5 years ago, even 1 year ago. And so we can expect that trend to continue. I think that's a safe assumption. Rise of fintech, that's another huge aspect. So anything jumping out here for you, Todd?
No, I mean, it makes sense. I mean, if you think about Robinhood making it easy to trade, it is easy to trade. Now, back in the old days, it was easy to trade. Anybody who's got gray hair knows that you could just call up your broker and say, buy XYZ. The trade could execute, you hang up the phone. It takes, you know, it's as simple as pressing a button to buy or sell, but you're just using your word saying buy XYZ, right?
Yeah.
And then you had, you know, kind of the rise of E-Trade and the discount brokers, which made that less likely because it's harder to call a broker to actually execute the trade. You actually had to have a PC or a desktop or something, a laptop, something that was connected to the internet to be able to go on, log on, be able to execute the trade, which actually wasn't as seamless, but it was cheaper. So kind of started the pathway towards democratizing it to all retail investors. And now, because of technology and the fact that you can have apps on your smartphone that you open with one button, type in a symbol and click buy with one button, we're kind of back to that ease of use thing. So I think that is interesting. You know, obviously they talk about, you know, how the average annual return of the stock market is good, you know, up 9% per year traditionally. Usually people model for a little bit less than that just to be on the conservative side for returns. And a lot of people obviously, you know, that, hey, you know what, the meme generation or whatever has attracted a lot of attention to the importance of investing. I think this is a way more common conversation within, people around your age, Joe.
Absolutely.
It would have been a decade or 2 decades ago.
Yeah, check out this first line on the next page here. 60% of all Americans still don't have investments outside of their retirement accounts, and 68% of young adults aged 18 to 29 have no money invested in the stock market at all. So I think it's pretty clear that Robinhood's target market is generally younger people. So there's a big opportunity for growth here for them. The one, I guess, from a potential investor standpoint, the concern I have with that is they don't have the competitive advantage that they had 3 years ago or 4 years ago when I first opened an account with them, because there's nothing preventing someone from just opening an account with Fidelity or with E-Trade or you name the brokerage. Doesn't matter now. They're all free. But the only reason why I signed up for Robinhood, I'll say it again, is because of the no fees. So yeah, there are a lot of people out there who still have accounts so that they can trade options, but that's not a majority for sure. Most people just don't have the expertise, don't have the time to trade options. They're just gonna buy and hold like the rest of us.
Yeah, and options, as you know, anybody who's listened to our show more than once, options are scary because of time value decay, and it's a fast way to the poorhouse in many respects. Trust me, I know I suffered the consequences of being an options investor early on in my investing career back in the late 90s during the internet boom, and lost my shirt in the internet bust. The two things that I continually pound the table on in this show is that margin and options, yeah, they're great when the market's good, but oh my God, the market will fall way faster than it increases, and you can get absolutely run over in them. I think one of the things I've joked in the past before about, Joe, is that will we ever see in my lifetime negative commission rates? Maybe.
That's an interesting question. Negative commission rates. So can you just kind of like explain how that would work? How we would end up with a negative commission rate?
Yeah, let's begin with a question, Joe. How does Robinhood make its money if it's not charging you fees on commissions on your transactions?
It's, from what I hear, it's a little bit wonky. They make their money through like the spread on ask versus bid. I think I got that right. So
yeah, it's order flow. I mean, they're getting paid for order flow by large middlemen who are taking that order flow and profiting from it in various ways, either on the spread and changes to the spread. So maybe you're not getting the best allocated price possible that maybe you would otherwise, or they're to some extent, for lack of a better term, apologize because this is a legal issue, but some sort of front running of it where they're taking the aggregate of all of this information and they're coming to some conclusions about what could happen to the stock prices and maybe trading out ahead of it. So they're getting some money from these third parties. So make no mistake, this is a for-profit business, right? They made $7 million a year last year. They did $1 billion in revenue. So somebody was paying them $1 billion in revenue last year for access to the order flow that's going across that platform.
Yep.
So think about it this way now, Joe. So you're saying to yourself, okay, someone is paying for access to that. How do you make sure that you're able to have enough order flow for people to want to continue to pay for that, or to pay more for it and to provide you with revenue growth over time? Well, you have to incentivize people to use your platform.
Yeah.
So if we're at free commissions now, how else do you incentivize? I suppose you could incentivize through free giveaway of shares of stock, which they do in the referral program, which I suppose you could argue is a form of negative commission. It's not negative commission, but it is, a value that you get for using the platform. So I'm thinking about it out loud in my head and saying, well, if each individual is given a penny negative commission rate, but they can somehow monetize that at $0.015, then maybe that's the direction that we're going to head. Because like you said, what's the differentiator here now between Webull, Robinhood, E-Trade, Fidelity, anybody
Right.
with free trading?
Absolutely. And I would encourage everybody watching and listening to look up or some sort of article or video. They're all over the internet of just to get yourself an idea before you go to invest in Robinhood. Just watch a video on how they make money because they're explaining it in a much better way than we are. And it's a really interesting process, and it's really important that you know how they make money and how that might change. So one last thing that I want to add here, and this is one of the reasons why I will not invest in Robinhood, besides of course all of their legal ethical issues over the past several months. But the one thing I remember when I had a Robinhood account is you go to buy a stock and say the stock was trading at $29.50. You hit the order button and your trade would execute, immediately, more or less in a few seconds, but you'd end up getting it at like $29.53 or something like that. So that's kind of like how they make their money, going back to like the spread that we mentioned before. But it ends up like the consumer, the account holder, the shareholder ends up kind of footing that. And sure, at the end of the day, if you're buying a $29 stock and it's a growth stock, you probably don't care about 3 cents. But at the same time, that's like going to the grocery store and buying something for $2.95, and you get to the register and they say your total is $3.05, please. To me, it's a little sketchy.
Yeah, I take that analogy another way too, Joe, and just think of, okay, if you don't know what the product is you're paying for, right? If you're not paying for whatever product or service you're using. So look at Facebook, right?
Yep.
Well, how is Facebook making money, right? It's a for-profit business. Well, it's selling your information, your use of it to some other third party. I'm fine with that, right? I don't care. I'm using this platform, whatever it happens to be. I'm on Twitter all the time, right? I love the value I get out of Twitter. I don't pay anything for it, but you can tell, they monetize me and everybody else who's on Twitter, right? And Robinhood's kind of the same way. I mean, you're going to get monetized one way or another. These are for-profit businesses, right? They're not.
That's right.
So they just go in with your eyes wide open, as Joe said.
They have to make money somehow. Facebook is free for you to use, but they will shove ads in your face as often as they can. Say goodbye to Wallace, everybody.
Wallace has left the building.
Wallace has left the building. There's our new mascot, everybody.
Last thing before we jump, Joe, because I know I can feel you getting to the point where you're going to ready to do a jump and a slash pivot. I just want to also just throw out there that Robinhood is making 35% of the shares, it looks like, available to people who are on Robinhood's platform. So that is an interesting incentive for those of you who do want to own Robinhood shares. I don't know the exact day that they're going to start trading. Do you, Joe?
That has not been announced yet, to my knowledge.
And I don't know if you have to be on the platform by a particular date. So you might, if you're thinking about it and you want to get allocated at the IPO price and you want to try, you could always, try that way. But I did think it was interesting that they were doing it that way, and at least carving some shares out for their own supporters, people who are using the platform.
Yeah, I think that'll work out very, very well for Robinhood as a company and their bottom line.